Hi, thank you for being here. As I get started, I would like to just offer some information based on the data that was reviewed for this analysis. The data in the raw data sheet began in November of 2007. It offered 2 months worth of data from 2007 and then didn't offer any more information until January of 2012. In January of 2012, the same type of data was recorded on a continuous basis until September the 10th of 2013. Now, the data from 2007 is very useful because it gives me an idea and a starting point to configure company growth and impact among different products, regions, and customers. Without that brief sight of data in 2007, it would be very difficult to chart company growth over the last several years. Most of the graphics and information you will see in this report specifically speak to 2012 and 2013. The reason that is just because moving forward and some of the trends that we'll discuss and some of the products that are having larger impacts than others are really going to be more obvious by just viewing the last 2 years worth of data, even though it is being considered over the greater term of 2007 until now. Gross annual sales. Now, as you can see, sales in 2013 look very good compared to 2012. Every month in 2013, we've exceeded 2012 mark compared to the same month, with the exception of March of 2013. I will note that the data on the raw data sheet ended on September the 10th, so the sharp decline from August to September of 2013 is not realistic. That would likely continue on briefly upwards or slightly downwards compared to the year before, but nothing anywhere close to what you see it on the graph. Some important aspects about the gross sales overview is we averaged an 84% increase on a month-to-month basis 2013 compared to previous data in 2012. And most interestingly, compared to the 2 months worth of data in 2007 to 2013, you've experienced close to a 400% increase in gross annual sales. Very good. The customer outlook. Now, this part is where I began to kind of dive into the weeds of the data a little bit. Now, on the surface, it's exactly what you would expect. You already know that you earned an exceptional amount more money in 2013 than you did in 2012. And looking at these charts and the top 10 customers and the years compared would reveal as much. But when I started looking at it a little bit in specific customers, there's some parts of the data that kind of worry me from my standpoint a little bit. What I mean by that is 44% or 34 out of the 83 companies that purchased products in both years actually spent less money in 2013 than they did in 2014. That means that 55 or 56% of your customer base didn't spend as much money, and that 100% gross sale revenue increase in 2013 compared to 2012 is only the responsibility of half of your customers. From my perspective, that means that there's money to be earned back. Now, when I started looking into why specifically maybe some of these companies didn't spend as much money, I couldn't figure it out based on the data at hand. For example, the bottom 4 companies on the graph for 2012 did not repeat in 2013. However, they purchased the exact same products that the top customers purchased in both years. So there's no way to narrow it back to a specific product. There's also no way to narrow it back to a specific region. For example, even though France and Denmark logged top 10 customers in 2012 and didn't log customers in 2013, Canada logged a customer in both of those years, and it's a different customer. So regionally speaking, there was no way for me to narrow back the decrease to that either. Some nice things I want to point out though about 2013 specifically is that every company, whether they're a repeat from 2012 or a new company in the top 10, with the exception of one, and that being Rattlesnake Canyon Grocery, spent more money, some by a large margin. In fact, Haneri Carnes, a company out of Brazil, came out of nowhere. They're now number 5 on the top 10 customer list for 2013, and they absolutely came out of nowhere from 2012. That's very nice to see some things like that. So your product line. Now there's some pretty interesting data within the products in the raw data sheet. Between 2012 and 2013, 8 of the top 10 customers repeated in both years. But don't let that fool you too much. Now, you already know that you earned a lot more money in 2013 than you did in 2012 on a gross point scale. But some of the companies, and in fact 4 of them in 2012 that were top 10 customers, even though a couple of them are on the list in 2013, they actually spent less money. Now, a couple of alarming aspects, and that is that you now offer 77 different products, and you did in 2012 and 2013. So, out of those 77 products, 54 of them increased in gross sales in 2013. Now, that leaves 21 of them that didn't increase, and 2 of them that actually stayed exactly the same. So, you're above average in the point of increasing sales among more products than not. But some of the increases aren't as sharp as you might think. Now, number 1 in both years is a beverage. Now, you would think that it makes sense that beverages are your number 1 selling category, therefore a beverage would be your top selling product. But a strange thing about that is out of 12 beverages, this is the only one that's in your top 10 in 2013. You had another beverage, you had 2 beverages in 2012, you're down to 1 in 2013. Now, beverages actually increased in sales from 2012 to 2013, but the pace of it isn't as much as some other ones. Now, the good part about some of these meat, produce, and some dairy products on here is you've seen a sharper increase in sales. Number 2 in 2013 increase. Now, it was number 3 in 2012, the roster bratwurst, but it's increased quite a bit. In another couple of years, it could overtake the top spot if the same trend continues. On a categorical basis, the only difference is you dropped a beverage in 2013, added a produce, and produce has been one of your better performing products recently. Going back to 2007, you've seen quite a bit of growth among your products. You actually increased your product line by 20 products in that time period. So that part of the business looks very good. Out of the top 10 products in 2013, roughly 35% of your gross annual sales are represented within these 10 products. That means that there's 44 other products that increased in sales in 2013 that are making up roughly $550,000 so far into 2013. So you have some really good performing products. You're diverse within the different categories in your top selling products, but out of 77 products, these 10 that are on this list are really making up a lot of your profit and a lot of your money for you. And the rest of them are really kind of bunched in there together, especially once you start getting down to the bottom performing products. Alice Mutton and Noche de Nana Alice, both actually, they remained on the top 10, but they decreased in sales. That would be a grain and a meat product. Meat actually is performed very well across all meat products. However, that is one that has been trending downward compared to these last 2 years. The Icura product at the bottom, that product actually increased in sales quite a bit. That seemed to be a very good selling product for you in 2013. I think it's worth noting here that as you move forward, especially among beverages, condiments, and confections, there's going to be some hard decisions possibly be made in the future as to what products are worth keeping as part of your product line, and what maybe you need to evaluate changing or removing as a product that you offer, just because obviously from a business standpoint, even though the data isn't available here, it's more expensive to carry more products, and eventually you got to make those decisions. Your regional outlook. Your regional outlook will kind of help you look at how your company is performing across the globe, across what is now 21 different regions that you serve company in worldwide. Some of these companies, and for the most part, they remain in line with what you would expect according to the data. Now, obviously, it's well known that the USA is your top performing region. It has been for at least these last 2 years, and before that we don't have data on. But exactly what you will see in the chart is the United States is 24% in 2013 of your top 10 performing customers. Behind them is Germany. They hold the same spot as 2012. And then Austria, even though percentage-wise they decreased on a top 10 scale, they're still number 3 performing regionally. After that, we start to see some changes. So France, for example, was the number 4 company in 2012. They've moved all the way down to number 7 in 2013. Don't let that necessarily alarm you, because some of the regions in between have seen some very good growth. To speak to all the regions represented within your company, not just the ones on the scale, some of them decreased in sales in 2013. Mexico, Canada, Portugal, Finland, and Denmark, and France as well actually all decreased. Now, when you look at the data of those regions, nothing speaks to you as far as a product line goes. So there's nothing that's obvious to the fact that there's products from 2012 to 2013 that must not be good because they're not buying them anymore. That's not the fact, because there's plenty of other regions that are purchasing the same products. The information to dive into that within the data is not there, and that would be there must be some issues with either marketing or transportation or some other type of business cost that companies located within these underperforming regions are not happy with. Now, some positive notes in here is Switzerland, Norway, Sweden, and Italy, 4 very good performing regions, all increased in total sales in 2013. Sweden, actually, they really performed well. They moved all the way up to number 5. They weren't even on the top 10 list a year ago. In 2013, they're number 5. Switzerland made the list, and they're number 10. But surprisingly, and maybe most remarkably, you won't see their name on either list, but Argentina in 2013 increased sales so far by 539% compared to 2002. So there is a market and there is a trend to watch closely over the coming years. So now that you've had a chance to see the complete data analysis based on the raw data that I obtained, I have a few suggestions or recommendations that I believe will help your company moving forward, and be able to allow you the opportunity to better track your products, track your progress, and offer more sound data at hand in the future. Number 1 is tracking how products are sold. Now, this could be very important as your company grows, in determining how your marketing schemes work best, or how your salespersons divided amongst different regions and different areas are performing. If you were to track this, then you could easily go back and sift through the data and determine how much of your sales is determined by the internet versus a call center of taking orders over the phone, or a salesperson out going door to door, customer to customer, pitching products and making money. Um, I also bring that up because some of the regions, some of the companies out there that didn't perform as well in 2013 as they did in 2012, and based on the data at hand, I was unable to determine exactly why. What I did determine is the fact that I don't believe it's product driven or location driven. There's got to be some other aspect of your company or some other aspect of your products that do not appeal to some customers as much now as they once did. That's important because if you have that information, if they're not seeing your employees, if they're not seeing the opportunities to make those purchases, tracking this information will give you an idea that that is the issue at hand. It's a real simple column. It's a real simple way for each order to be tracked within data. And then at the end of a certain period, a certain time frame, you can go back and you can look at gross revenue, profit margins, different areas of performance, and see how one aspect of your marketing plan pays off compared to others. Number 2 on here, track business expenses according to region and included in the raw data. So this goes back to another aspect of trying to figure out exactly why some businesses, some customers, and some regions didn't perform as well in 2013 as they did in 2012. Obviously, and it's not included in the raw data I analyzed, but obviously there is a price, there is an expense to running this type of business. You have to move product from one place to another, sometimes over a great distance, in order to satisfy customers. That transportation includes a price. So to know exactly how you might be selling a beverage to a company in Belgium for the exact same price you sell the same beverage to a company in Argentina for is very difficult to imagine. Without knowing what type of business expense, and it doesn't have to be specific as far as taxes and all the different expenses, perhaps a percentage of gross sales, or a percentage, a round number to use for your different regions. And I suggested regions because I think that even though there may be some price differentials within each region, it will be easier to track that way, and you won't have to separate it by individual customer. I think this is important to measure, not only for the reasons I've already discussed, but it will give you an idea of some underperforming markets and give you a time that you may want to consider separating your services from them and concentrating on a different area as well. Number 3 on the recommendation here is conduct a qualitative survey with your customers over all of the condiment and convection products offered. Now, going back through the data, it's very easy to note that ever since 2007, really, but more importantly 2012 into 2013, that your condiment and convection categories have not seen the type of growth that most other categories have. Now, they haven't seen losses necessarily, but their growth pattern is not what you see as far as dairy products and some meat products and things like that. Now, I asked to do a qualitative survey with your customers based over these, At one time, believe it or not, confections was the #2 selling category within your company. They've come all the way down to being in the last two now. So none of your top customers routinely purchase condiment and convection products. They do purchase some, but they are not leading categories among any customer or among any region that you currently serve. I think that from a business aspect, it could pay off by getting to the bottom of this and figuring out if you need to scale back some of your condiment and convection categories, or maybe terminate one of those areas altogether. Just for example, you offer 13 different products within the confections category. You offer 12 different products within the condiment category. There's more products offered within those two categories than any other category you have, with the exception of beverage, which also offers 12 different products. So I would be inclined to think that out of 25 of your 77 products, one of them would be a top seller and a top earner for you. That's not necessarily the case with your company. I think a qualitative survey with some customers that have some experience buying those types of products would benefit you in the long run. It would give you ideas. It would offer you advice on maybe some items that aren't worth pushing anymore, stocking and carrying and attempting to deliver as much as they once were. I hope you've enjoyed this analysis. I hope that you have a better idea of your company's performance, and I think that you could benefit yourself a great deal by taking some recommendations and suggestions seriously. I appreciate your time, and I look forward to your comments. Thank you.